I think that's what's so interesting about student loan planning is that you can get really creative with it. Because of course, like a lot of my clients are pursuing public service loan forgiveness, right? So a lot of them are physicians, potentially lawyers working for government too. I have a lot of like teachers and administrators too.
Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Encompass More Asset Management LLC is a registered investment advisor with the U.S. Securities and Exchange Commission and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements.
Hey guys, welcome back to another episode of the Discharging Wealth Management Podcast. Today we have Emma Crawford on as a guest. She is actually a certified financial planner, but as a business, October Loan Strategies, that she specializes specifically, not in doing financial planning, but specifically in addressing student loans with people. So she actually works with a lot of financial planners and supporting them and helping with this very niche topic with clients that it can make a huge difference. And so today we just had a conversation about like some of the things to be aware of around student loans. If you are either a student loan borrower or looking at the demographics of this podcast, you have kids maybe or family members that are looking at taking out student loans and you're involved somehow either as a co-signer or wanting to assist in some way. So hopefully we give some context, talk about some different resources to access, and hope you guys find the value. As a reminder, if there is something we didn't touch on today that you would have liked to know, go ahead and reach out to me, send me a question, either email me, brandon@dischargingwealth.com, or send us just even on the website, contact us, submit your question, and we will look into it for you and try to get you the answer. And if there's a topic that you haven't heard us address on the podcast yet that you would like us to either bring a niche expert on or bring on one of our advisors to talk about something specifically, please let us know that as well. We love producing content that you guys are asking for. So with that, let's jump into the show, and I hope you get the value out of it. Because of the federal regulation and guideline around student loans, there's like a ton of nuances, right? Like, yes. I know enough to be dangerous here. Different repayment plans, your inability to default on it, right? Like huge part of student loans.
You can default on it.
Well,
it's kind of hard out of, but it's different. You're exactly right. It's different than other types of debt, certainly.
Yeah. So it's like, it's no joke. You see these posts all the time. At least I do. Where people are like, I've been paying on my student loans. Me and my wife, we took out $120,000 in student loans, and we've been paying all this money for, 20 years. We've paid now, $300,000 in student loan repayment, and our balance is, $98,000, and it's like, well, first off, wow. Second off, they've really designed student loans that if you take them out, you got to pay them back, whether you pay them back directly or through, an obligation to society, like, and you get, forgiveness somehow on them. You got to do something, right? They don't just disappear on you. And it's not something you want to mind the farm is kind of what I'm getting at, right? Like you can't just ignore it and make the payment, right? Like that's where you come in, right? You're a student loan specialist and you understand these nuances. So, what I want to, kind of talk about today is like, what are the three things that people need to understand about student loans? And what should they be, doing or thinking about that?
Yep, you're exactly right. I think that student loans are federal student loans specifically. So I want to break that down and really clarify for the audience that federal student loans come from the federal government through the FAFSA that people submit to get financial aid through school. So these aren't loans that you're taking out through a private bank like US Bank or Wells Fargo. They come from the FAFSA from the federal government.
Okay.
And like you said, there are so many different options and nuances, but actually this is a great kind of intro, Brandon. So I appreciate it because my first tip of advice or like the must knows is that loan borrowers have to know and understand their options. Because like you said, there are a few different repayment plans that exist. And people can't just like not pay them, right? Because you can default on the student loans, so you can't just stop paying it. But you might not get the information needed from a financial aid office or from the loan servicers themselves. In fact, I hear horror stories all the time from my clients that they've been given bad advice from the loan servicers, like the company that they are repaying their loans to. And so it's very complicated to navigate. But like you said, it's so important that borrowers know and understand the different repayment plans and which one they should choose based on their circumstances and goals, because they do have to repay them somehow, whether they're going to repay them themselves or through public service loan forgiveness or income-driven repayment forgiveness. They got to get paid off somehow.
Okay, so number one thing is you got to know your options. So where does somebody go to find their options, right? Like, I mean, we live in a day now where people, I mean, if you're behind the curve, you Google it. If you're, on curve or ahead of the curve, you're probably using Perplexity or some form of AI now, right?
Yep.
But there's so many nuances to it. You can't just hop on, the .gov website and have it just say, Emma, these are your three options, and, answer these two questions and we'll tell you which one's best, right? Like it's way more nuance on that. So where does somebody go to start figuring out or seeing what their options might be?
Yes. If you are someone with loans and you're getting ready to start repayment, or maybe you want to review your options, I do think that studentaid.gov, it's not perfect, but it does have a landing page where I think it's literally repayment plans. And it breaks it down into the two different groups of repayment plans that exist. Okay. So group one are fixed repayment plans, where they take your loan balance and divide it up over the next 10 to 30 years. And then there are income-driven repayment plans, or group B, where the monthly payments are based on your income rather than your student loan balance. And so that's, I think, the most confusing part, and sometimes the most surprising part. There was actually just a huge study done that more than half of student loan borrowers don't even know that income-driven repayment plans exist, meaning that they don't know that there could potentially be a lower cost or more affordable option out there for them. And this is really helpful for folks who just graduate, or even like I see this with physicians too, who graduate from medical school with 6 figures of student loan debt, but they have to go to residency and maybe fellowship where they're not, they're making decent money, but not the money that they're hoping to be making in the future as a physician. And so they need those affordable options during training. And that's really also what I want to hit home today is there are a couple different income-driven repayment plans, and each one calculates the monthly payment a little bit differently. And your eligibility for a plan might be limited based on when you took out the loans. So everybody is eligible for at least one income-driven repayment plan, even if you were to make $1 million, but you might not be eligible for all of them. But studentaid.gov is actually like a pretty decent place to start to at least get a good overview of what the options are.
Okay. Do you want to elaborate more on what are the main payment or income-driven repayment plans?
Yes, because that's I think you and I talked off earlier, in our initial meeting, Brandon, there's so much going on now because the SAVE plan, which got tons of news once the Biden administration unveiled it in summer of 2023, the SAVE plan has been the one that's been in the news the most often because it's now blocked through the 8th Circuit Court. So we had millions of borrowers get automatically put on SAVE, which is one of the income-driven repayment plans. And now it's been blocked. So those borrowers are now on this forbearance period where no payments are due until it plays out in the courts, which might be in the next few months, fingers crossed, because I think people are really wanting and needing clarity right now.
So what about interest? Is interest still accruing on those loans? So you're not making a payment, but is interest still accruing?
Not for those borrowers. That's a good question. So that is an interest-free, payment-free forbearance because, the borrowers, it's not really their fault that they're kind of stuck in this limbo or this administrative forbearance period. Okay. So thankfully, no interest is accruing, no payments are accruing. Or sorry, no payments are due, no interest is accruing.
Okay. So
good question.
What is the premise of the SAVE plan? And who does that sort of apply to normally?
Yeah, so because of how the plan was set up, the monthly payments were going to be significantly cheaper and more affordable for people because of how the payments were calculated compared to the other income-driven repayment plans. Additionally, it was a huge deal because no interest was going to accrue as long as the borrower made the minimum monthly payment. Because like you noted, Brandon, I think a lot of people have, they struggle with repaying their loans, not necessarily, not always because of the principal balance that they take out, but because of the interest rates. And of course, interest rates have been rising pretty significantly on federal student loans over the past few years. So now we have students taking out loans ranging from like 5 to like 8 to 9%, which is pretty, that's scary, of course, to us, for us in the financial services industry.
So when somebody takes out a federal student loan, is that inherently a floating rate interest rate, or is it a fixed rate? So, and what I mean, but like, I'm thinking of it through the lens of like, I always use real estate. It always resonates with everyone. Mortgages, right? Is it more like the HELOC, right? That you take out, you have this, they gave you money, and, if interest rates go up, your rate goes up. And if interest rates go down, like when the Fed's lowering the rate, the rate comes down. Or is it more like getting a mortgage where it's like you borrow this money, you borrowed at 5%, and no matter what happens to interest rates, whether they go to 0 or 10 or 15, whatever, it's like you're at 5. Is that
exactly? It's fixed. Yep. So
okay.
It's fixed. So so for federal loans, the government, they set the interest rates usually in the spring before the upcoming academic year. So I'm expecting them to come out with the interest rates for the fall 2025 to like summer 2026 academic year sometime soon in the next few months. And then those are locked in for the life of that loan. So they're fixed depending on the academic year in which you take them out. Question.
So they'll come out shortly here. They're going to come out with the interest rate that will issue with essentially the loans taken out for the academic year of 2025 to 2026. So starting in like August or whatever. So that opens up like a unique planning opportunity where if you are either a borrower or in my case, like I'm thinking more through the lens of an adult, a parent, like maybe assisting a kid through college. Right. And it's like, hey, do we pay for tuition? Do we tell them to take student loans or not? You can get that interest rate now. And, now run your calculations on, do you think that's a favorable rate or not? And, do you think it's better to have them take out the loans and it's a reasonable enough interest rate? Like I'm generally a fan. In my family, we always had the I don't know, we didn't really have like a word for it. But my dad's thing always was like, have your own skin in the game, right? Anything we wanted to do. So it was always like, you go front your own money, and then as long as you are successful in it, right? And so I know like when my sister went to college, it was like, as long as she got good grades, then she would get reimbursed. Like, so she pays the tuition up front, she performs, gets a degree, mom and dad help out on the backside. Right. Like, and, obviously like I'm very blessed to come from a family that has that type of situation. Personally, like I didn't do that at all because I had the GI Bill as a veteran. And so, anyways, when parents are looking to like, do we help kids? I'm generally a fan of like, if the interest rate's reasonable, like you can have them take the FAFSA loan and then like they're on the hook for it. And if it's, let's talk about maybe like subsidized and unsubsidized for a second. But if it's subsidized, no interest is accruing. If it's unsubsidized, it accrues interest. But if you're planning on like, hey, as long as they, hold up their end, you're going to come back and, pull out money from your brokerage account or savings or whatever and help them out. You have that choice as a parent, right? But you can maintain flexibility. However, like and interest rates aren't right here right now. If you look at the rate and it's like 18%, you're like, oh my gosh, I'm not doing that, right? Like we're going to figure something else out. So really long-winded to say, I guess go find the interest rate this spring when it comes out and then plan around it. Okay.
Exactly. Yeah, totally. And I was just trying to think, I was thinking on this earlier today, reflecting when I was having a conversation with another financial advisor about their client who's planning on going to dental school. And I know a question that came up was like, what do we expect interest rates to do for the next academic year? And I actually have no idea. I don't know, like I'm pretty 50-50 on whether it will continue to increase or decrease. So TBD, but you're exactly right, Brandon. We'll have to wait the next few months to see what happens with the interest rate.
Like now you're getting my wheels turning. I love managing like bonds and looking at the bond market, trade a lot of bonds and, as an expression of a risk instrument, I'll add. However, I don't know, like when it comes to mortgages, people are like, what are mortgage rates going to do? Like, I know, or I mean, like, I don't know what they're going to do, but I know how that market works, right? Like I know how mortgages are priced and I have a general idea of, what the 10-year is doing. I don't know what it will do, but I know what it is doing. But I don't know about student loans. Like, I don't know if that's priced off the 10-year or how those interest rates are sort of calculated. I'm going to have to do some research on that.
Yeah, it typically is. Yep, exactly. It typically is.
Priced off the 10-year?
Yes.
Okay.
Yep. And like another concern that's coming up too is like how expensive our school is going to be too. Like some institutions, like they have guaranteed where it's like the price is locked in for, a certain number of years. Like Wisconsin, we had tuition freezes for a good number of years, I believe. But now, of course, like I'm not sure what inflation rate you use in your financial plans do, but we use like 5.5% for college inflation rates. Like things are just getting more expensive. And so we typically are seeing people take out more and more loans each year.
Oh, horrific.
Things are just getting so expensive, as you know. Cost of living, increasing, college, increasing, grad school, increasing. It's increasing across the board.
Yeah. And I think it's a hyper political topic. So forgive me if I don't want to drive down that road today. But I want to stay definitely on track of, making sure that we're providing, so just some deep value to people of what do they need to do. If you, hey, if you're looking at taking out student loans, it's a huge decision. If you're younger, if your kids are looking at taking out student loans and you are in a situation as a parent that you want to help in some way, right? Like whether that means co-signing or, giving them money or gifting later on or whatever it may be, like you got to understand the options that you're getting involved with or that your kids have access to. Right.
Right.
So, hey, know your options, look at the interest rate, understand the interest rate. What else? Like, what are the other things to really have a good awareness around?
Yes. Yeah. Great question. So you kind of alluded to this, or you mentioned this too, the difference between subsidized and unsubsidized. So those subsidized federal loans are only offered at the undergraduate level to higher need students. And so a lot of people are surprised, especially when I worked at UW's medical school, students were shocked when they realized or learned that interest would start accruing daily. So that interest, the second that it disperses to a student, that unsubsidized loan will start accruing simple daily interest. So I think it's just good to understand like how the loans work. Of course, payments will be paused through school as long as the student remains half time. And then they do have a 6-month grace period after graduation where no payments are due. But then those payments will kick in 6 months after that, after that graduation date, either, once from when they graduate or drop below half time. But I did want to clarify because you did bring up subsidized versus unsubsidized, and it's a common question that came up. So I wanted to note that too.
Yeah. Well, I think it's like, that is one thing that I am aware of. And I think it's an important thing to understand and track, because if you have, if you have the ability to take student loans and you qualify for that, you may elect to maybe take the subsidized, but not the unsubsidized. Right. And that outcome and when the repayments not start, but the interest is accruing and what those payments will kind of be is a totally different outcome. Right.
Totally. Yep.
So understand what your repayment options are. Understand what your interest rate will be if you take out those loans. Yep. It doesn't change unless you refinance them. And the last thing would be understand if it's subsidized or unsubsidized. Like, what are your options? Can I add in? Am I wrong to say that if you go to a private institution, it works very much the same as a unsubsidized loan, except it will not have the flexible repayment options? And what I mean by that is, like, if you go down to Wells Fargo or XYZ large bank, and just get student loans, like, they may have a deferral period on when the payments begin, but it's going to start accruing interest. It's likely a fixed rate. You'll have to just check with them on that. It could be, it's a private loan, so, anything goes, I suppose. But once you're done going to school, whether it's graduation or you just stop going or whatever, you're going to have to repay those loans. How do those fare compared to like the federal student loans when it comes to that ability to default on them later, right? Like, so one of the big things, and ironically, now that he's president, it's like Joe Biden helped pass through Congress in the 90s, is you can't declare, you can't get out of student loans from declaring bankruptcy, right? Am I correct in that or incorrect or?
It's, and to be honest, I am like certainly not an expert either. Like there's like a lawyer that I like to connect with when it comes to bankruptcy, but I should say, there is like, I was actually just reading an article about this the other day that a lot of people don't think that you can get rid of federal loans during bankruptcy, and you can, but the threshold is pretty high. Okay. And so it's not impossible. It is possible, but it's more difficult.
Sure.
So I'm not sure what that threshold is. You really have to display like a severe financial hardship. So yeah. I don't know what that would look like from a bankruptcy attorney standpoint, but it is possible, but it's very difficult.
Well, I think like the intention behind that law or those sets of laws is like, they don't want you to go to medical school, rack up $1 million in student loans. And then, you graduate and you're like, I declare bankruptcy, in full Michael Scott fashion, like I didn't say it, I declared it. And so now all my student loans are gone. And, and then you're like, but by the way, I start my job making, $700,000, $800,000 a year tomorrow. Right. And so realize I always think of this. It's crazy that somebody borrows people money for student loans. It's sort of crazy, especially like at a reasonable interest rate. Like if you think about it by comparison, it's a totally unsecured loan, right? The person you're borrowing to it almost always has no established credit. They have likely no income. They almost certainly have no assets, right? And you're like, yeah, you want to borrow a mortgage worth of money? Sure. And we'll give you a really fair rate while we're at it, right? Interest rate. It's kind of crazy. So like in a totally free market, like if somebody came to me and I had to be the student loan guy, and I don't say this to make myself look like a jerk, but I might here. And they're like, hey, I don't have a credit history. I don't have any income right now. I don't have any assets, but if you could borrow me a couple $100,000, I hope to, make it through this multi-year educational program and then make fair money after graduation. And I'll pay you back over like the next, 10, 20 years, let's call it. Would you do that? Would you do that for me? I'd be like, maybe. I would say, first off, it depends on like the program. What's the real earning potential after this? Like I'm going to do a full evaluation there. It's not, it wouldn't be just like, oh, you want to study anything. And then the interest rate would be crazy, right? Like it would have to be crazy. Think of it like, man, it would be really crazy if that was like an totally open market. So subsidized by the government and having these protection laws for the creditors allows it to actually be a reasonable rate. And I think I'm going to stop while I'm ahead before we delve into like the door that potentially opens up for institutions to abuse that with tuition pricing. But nonetheless, it's crazy. Student loans are like a crazy thing to me.
They are. They're very unique. And I think that regardless of, like you said, they're very political. And I think that there is a real concern about, I think the question then becomes, okay, if these federal loans weren't available, how could most people afford medical school or dental school or law school, which are just, we're talking hundreds of thousands of dollars, not just in like tuition and fees, but the cost of living too. But I do feel I've, very real concerns too. Like I think anyone you talk to will say things have gotten way too expensive. Like the system feels like it's broken, right? And we're kind of kicking this can down the road, and we're all kind of wondering, when are things going to implode or when are things going to get better? Who's going to take charge of that? Like I completely empathize with that too.
Yeah. Okay. What other like major things should people be aware of? Like, is there anything else that you're like, this is a trigger point where it's time to just pay somebody to get some help and clear guidance? Is there anything that you find to be extraordinarily like abusive in, companies that might market services or anything like that?
That's a good question. I think the most I don't want to rag on them too hard because they're like under-resourced, underpaid for what they do. It's very complicated and I would not want to do their jobs, but I would really second guess the advice that a borrower gets from their student loan servicer. Like I said, I could write a book full of all of the wrong, at best it's wrong. At worst, it's super harmful. Loan servicers like Nelnet, Great Lakes, Ed Financial, Mohila, they just continue to give bad advice. So I would not trust necessarily what people. What do you say?
You're naming names.
Those are the loan servicers.
Okay.
Names.
So, I mean, to me, that's like, careful when you take advice, about, it's like careful taking advice from the car salesman that's trying to sell you a car. Like, be careful about taking advice from the loan servicer. Even if the person working at the loan servicer is like, even if they have good intentions, they might not have all the information. They almost for sure don't have all of your information. They don't have the full context of your financial life. And so even if they're trying to be helpful, it could just be incomplete. So have you found there to be like a dollar threshold where you're like, okay, like it could be catastrophic or more catastrophic if you act on, bad advice or, make the wrong selection on a repayment plan. Like, hey, if you have $15,000 in student loans, like you're going to be okay. Just select one and like you'll eventually pay them off. Hopefully you'll be fine. But if you have more than 15,000, you should really maybe just pay for a consult with an expert outside, get some good advice, make sure you're on the right track. Like, is there maybe it's not 15,000, maybe it's 150,000. I don't,
It's a good question.
Right. Like, it's kind of like when people ask me, when should I hire an investment advisor? Like, how much money do you need? Right. It's like, well, everyone's a little different, but is there a general,
That's a good question. I would say probably I can add the most value to people who have the most debt, right? Because
sure.
I think that's what's so interesting about student loan planning is that you can get really creative with it. Because of course, a lot of my clients are pursuing public service loan forgiveness, right? So a lot of them are physicians, potentially lawyers working for government too. I have a lot of teachers and administrators too. And so typically my average client has about $150,000 of student loan debt, but I can add enough value to even people with 50, 60, 70 on up.
Okay.
Once it, you kind of said, but when it's below 50, if I ever come across a situation, this has only happened once, where they wanted to work with me, but I just couldn't add enough value to justify my $600 consult fee, I tell them, and then they don't owe me anything. But if someone is pursuing some sort of forgiveness, whether it's the 10-year public service loan forgiveness or the 20 to 25-year forgiveness on an income-driven repayment plan, and they want to minimize payments, help understand tax implications, or maybe they're married and they're wondering if they should file their taxes jointly or separately, that is a perfect circumstance in which they should consider hiring me or a different student loan professional to help them with that.
Yeah. I think what I like about what you just said is there's some nuances there that I'm not even super in depth on, right? Nuances should we marry, file taxes married, filing separately or not, right? And my guess is most accountants are not going to be super tuned up on that, right? That's not a question that comes across their desk, and they're not typically thinking that way or strategizing that way. Not to say that they're not great, people or great at maybe a lot of other aspects, but this is can be a really unique challenge that people face when there's a lot of debt. Last maybe question here is there a certain type of repayment? Do you find if somebody's going for public student or the public service loan forgiveness or something akin to that it is way more important to make sure that you get, some professional guidance and help so that it's done right? Or is it kind of if you're going to do any of them that aren't just, the amortized, what would you call it, group A loans? If it's not that, you should maybe, and over this certain dollar threshold, get some help. Where does that kind of?
Yep. I see if anyone out there is listening and they are someone or they know somebody else pursuing public service loan forgiveness. So basically 10 years of working at a nonprofit or the 20 to 25 year forgiveness through an income driven repayment plan. It's so worth it to hire help because my consults, I make sure that you're on the correct repayment plan. Or for folks who are stuck in the SAVE forbearance, we'll look at what the next best plan is for you because I'm kind of assuming that the SAVE plan gets eliminated in the next few months. We'll talk about those tax planning strategies if they're married. It gets more complicated too if they're married and their spouse has federal student loans and they're on an income-driven repayment plan. So that's another planning opportunity too. But yes, I think it's absolutely worth it to hire help because I make sure that you're on the correct plan, that you're filling out your paperwork every single year. Sometimes there's opportunities to increase retirement contributions or to file for a tax extension too. There are just so many, I'm such a nerd about it and I get so excited about it because I can add a ton of value Like I usually save people like, 5 figures through like a $600, $599 or $899 consultation for married people with student loan debt. So I usually save multiples of my fee, because my goal when I'm working with my clients is to save them the most amount of money possible, but to help them along the way too, and make sure that they feel supported and they understand how to accomplish their goals in the most cost effective way.
Yeah. I think the most intriguing thing is that, it's just one really niche part of financial planning. And it's something that largely works really well if you have the rest of the financial plan still done. But so many financial planners, and myself included, like don't do a lot with student loans. Like that's not the demographic I normally work with. And I'm not super like dialed in on, obviously, like that's why we're having this conversation. I'm not super dialed in at every aspect of federal student loans. And so where you come in and work with existing financial planners that, people have relationships with, if they're doing planning as well, is like, that's a really kind of a unique thing. So, it's like, but it's also not, it's like you're looking for the inefficiencies that the accountant might be missing, that the financial planner might be missing, that the, whoever else is involved in helping, the attorneys, whatever. Certainly it sounds like the student aid office or the student, the servicers coming up short on. So interesting. Okay. Hey, I appreciate your time. Like, I think this is some really good information, right? Like go on student, is it studentloan.gov, right?
Close, studentaid.gov.
Studentaid.gov. Studentaid.gov. Look at the repayment options, like even before you take loans out, and just kind of understand what those options look like. Look at the interest rate and see what rate you're borrowing money at. Like that's important. Don't just necessarily sign. Because if that rate gets high enough, you might consider other funding opportunities or options. And the last one was like, really make sure that you understand if it's subsidized or unsubsidized. Beyond that, like when things get big and the numbers get large and the stakes are high, like consider getting some professional help. And if people want that professional help, like what's the, I always invite people, like you're welcome to, if you can't find her or something, reach out, I'll connect you. But where does somebody go to just find you directly, Emma?
Thanks, Brandon. Good question. So my website is octoberloans.com. Okay. October Loan Strategies is my student loan planning business. I only do student loans. And then if they go to my website, if they scroll down to the bottom, there's a link or there's a way to sign up for my email newsletter. I took a brief hiatus. I'm getting back into it now, but I try to send out an email once every 1 to 2 weeks, and it's not it's not salesy at all, really. It's like, hey, here are the quick hitters that you need to be aware of, like things that are going on right now, because there have been so many changes in the past few years, and I expect that trend to continue for the foreseeable future. And then there's also a link on the services page where folks can sign up for a free 15-minute consult with me if they want to talk to me and make sure that I can help. I think that's a good fit. Otherwise, they can, if they're ready to dive right in and want to book a planning meeting with me, that, that $599 one borrower or $899 married borrower option, they can do that there too. So octoberloans.com.
Cool. Hey, all right. You guys know where to find her. You know where to find me. And we're always happy to try and help people navigate the so complex world of the financial system in the U.S. Don't do much abroad, but America, number one. So, okay. Hey, appreciate you, and we'll see you around.
Thanks for having me, Brandon. I appreciate it.